Okay, folks, welcome back. This lesson is specifically dealing with futures and Forex and options on both. And it's important that you take a second look at this disclaimer. As a reminder, everything I'm teaching you here is for informational purposes only. Okay, lesson 2, ICT mega trades. This topic is dealing with Forex and currencies. All right, quarterly shifts. Now, when we talk about mega trades are a little bit longer term type of trade. They're not day trades and not short term trades. They're in between a swing trade and a position trade. They can go for a lot longer than we reasonably would expect in the beginning, and they can also go much farther than we expect them to go. But they all hinge on the concept that I taught you as it relates to quarterly shifts. Now, the impact of quarterly cycles in the markets as a whole, they can never be overstated. Every 3 months or so, the markets will tend to form an intermediate term turning point. Now, by itself, it doesn't give you directional bias. That's the other concepts that you have to use to get to that outcome, and it's going to be basically institutional order flow. But the overlapping of mega trade conditions, coupled with this effect, that is the quarterly shift, is crucial to finding the next explosive market moves. The next portion of this mega trade recipe is seasonal tendencies. Now, seasonal tendencies are important for mega trade selections as well, obviously. Otherwise, they wouldn't be in this recording now, would they? Now, we've covered all the salient seasonal tendencies for each market and asset class up till now. So you know exactly when I believe that the specific currencies are going to rally or decline based on seasonal effects in historical data. They are not panaceas. They're not be-all end-alls. They're just roadmaps, again. But I like to use them as precursors to what I believe may unfold in actual prices. Now, the seasonal tendency may or may not be a factor on all explosive moves, but most tend to be in alignment with this market phenomenon. And what do I mean by that? Sometimes you may have a seasonal tendency that's implying that a particular currency is supposed to decline this time of year, maybe even for several months. But the market internals are suggesting otherwise, and technicals are in line with it going higher. And other supporting factors would support that analysis. Then you really can't force the trade idea based on a seasonal tendency. You have to look at what the technicals as a whole and a collective sum whole of analysis than just one portion or partial component to the overall conditions that lead to a mega trade. So seasonal tendencies are important, but don't bet the farm on the fact that it has to unfold based on the seasonal tendency. Ideally, the conditions are even better when the seasonal tendency is in alignment. That's what I'm getting at here. The US dollar index. Now, obviously, I have preached this long and hard ever since the first day I came out on the scene as a Forex guru. Now, every significant mover in the Forex or currency markets will have its roots in the price action of the US dollar index. That means if it's going to be a significant price move, it's going to be mirrored in the dollar index. Now, while on the very short term, and especially when it comes to intraday trading, the dollar index can consolidate, and we can still see currencies that are foreign in nature trade stronger or weaker against it while the dollar index stays in consolidation. The search for mega trades in currencies will depend on the support of the trade idea in the dollar index, or it is not a qualified mega trade setup. An example, if we believe that the British pound is going to go higher as a mega trade, the dollar index should be in a sell condition. Vice versa, if the dollar index is poised to go higher and we believe the Canadian dollar is going to go lower as a mega trade, we have to see that bullishness in the dollar index. Focusing on the majors. Now, whether you like to trade the majors or the crosses, you need to focus on these majors for mega trade selections. Those are the euro dollar or fiber, pound dollar or cable, Aussie dollar, or as we refer to as Aussie, New Zealand dollar or Kiwi, dollar Swissy, dollar CAD or Loonie, and dollar yen, or as we refer to commonly as just simply the yen. Now, all major moves can be determined with these 7 pairs, and they are all you ever need to trade or follow. Now, I know some of you want these bigger range pairs, these beasts like pound yen and euro yen, and all these crosses. And some of you may not even ever like to trade the majors because they can potentially be small range environment pairs. Have to look at them to get a basis on where the next mega trade is going to be. The mega trade can occur in a major, as listed here, or it could be in a cross. But to find it in the cross, you have to understand these majors. So this is probably one of the most important lessons out of all the mentorship, because while I don't actively trade a lot of the crosses, there are instances where we want to take a look at them because they're going to provide us avenues at which we can trade mega trades for Forex pairs. Focus on the futures. Now, the majors have futures contracts that trade respectively, and this aids further in our analysis for searching for the marketplace to provide us explosive market moves. Those respectively are Euro dollars, British pounds, Australian dollars, New Zealand dollars, Swiss francs, Canadian dollars, and Japanese yen futures contracts. There may be something in the price action of the underlying futures that leads to an opportunity that ultimately unfolds as a mega trade. The next area of study is relative strength analysis. Now, there's 2 approaches to performing relative strength analysis as I define it. The first is to use the underlying futures price action comparably, measuring respective highs and lows. What do I mean by that? Well, if we're looking for a bullish scenario based on a weak dollar, so if we think the dollar is going to be going lower, lower greenbacks should send higher prices in foreign currencies. We could start going through all of the underlying futures contracts, the Australian dollar, the Canadian dollar, British pound, euro, New Zealand dollar, Japanese yen, Swiss franc, comparing the lows of all of those individual currency futures contracts. We want to focus on the markets that have a willingness to go higher and also hold their lows, have a higher low. That's going to be relative strength. We also want to be looking at the ability of these futures contracts to be able to break through old highs or premium arrays. So the markets that are able to trade through premium arrays and hold higher lows, they are, by default, a relatively strong market or a relatively strong currency. Not all of the currencies are going to create that condition. Some of them will falter and go lower. Some of them will fail to break through premium arrays. That's giving you underlying weakness. You want to cross those individual markets out if you're looking to be a buyer of a foreign currency. The second application is you want to be looking at the overlay tool that you can use for the MT4 for Forex markets. And you're going to be measuring the respective highs and lows as a result of looking at the overlay. So by overlaying multiple pairs on one chart with the MT4 platform, you can start seeing where there's accumulation based on SMT divergence across all of the pairs. Again, if the weak dollar is expected, we could be looking for pairs that have higher lows, as long as the base currency is the foreign currency and the quoted price is in dollars. In other words, Aussie dollar, euro dollar, pound dollar, Kiwi dollar. They have the dollar as the second in the name of their pair's name. That's they're quoted in dollars. The base currency is the first currency in the name of the pair. You have to reverse it now, and you have to invert it when you do the overlay for dollar-based crosses against the quoted pairs, like dollar yen. So dollar yen, it's being quoted in yen. Dollar CAD, it's being quoted in Canadian dollars. Dollar Swissy, it's being quoted in Swiss franc. And that would look like this. So you'd have all of the overlays on top of the chart. And it looks rather busy, I know, but I put them on just to give you a contrasting view of looking at what looks like, a spaghetti mess on a price chart. If you understand what you're looking for, this gives you a mountain of insight. And I actually go into detail about this in the month of August when we break down top down, so we can go through examples of it then. But there's two approaches to looking at relative strength. And again, it's pure looking at highs and lows with a candlestick or open high low close bar chart, or using a line based perspective with an overlay with MT4. They will both ferret out the significant movers. You won't miss a mega trade by doing one or the other. It's just a matter of which one you prefer. I've done both interchangeably throughout the years, and sometimes there's going to be market conditions that really require you to use the actual underlying futures contract chart and compare the highs and lows there. And other times the overlay concept will be very clear and obvious. Okay, but the best world for you to reside in as a trader is to kind of like use both of them, blend them together, and hopefully they should agree with everything you're expecting. And if they do, chances are you probably got a tiger by the tail. Okay, seeking mega trades. Now, the simple process of beginning to end in very, very simple terms. Okay, it's not a complete approach, but overall, it's you look for strong and weak currency futures. Okay, you start at the futures contracts and you look there and you look at the institutional order flow of those currencies. And then you study the Forex pairs respectively. So if you are seeing a small group of currencies in the futures market that are showing relative strength that's bullish, and say one of them is the euro and one of them is the Canadian dollar, obviously you need to know what they are in the pairs, euro dollar and dollar CAD. You're also going to be conferring with the dollar index. So you're going to be looking at what direction is the dollar index. Is it supporting the idea you think is going to unfold in the strong or weak currencies? Then you're going to be using relative strength in each currency to make sure that you're getting this very strongest of the currencies that you're trading. Just because you may have a collection of 3 or 4 that are relatively strong with institutional order flow, and the dollar may be supporting that idea in a converse manner, you still want to break these down in relative strength analysis by seeing which of that smaller group of currencies is the actual strongest and which one is the actual weakest. You're going to be filtering leadership currencies by doing this. So that way what you're doing is you're getting the strongest and the weakest, separating the two. You want to find the weakest of the weakest and the strongest of the strongest. The strong ones are going to have an ease of going through premium arrays, in other words, going through bearish order blocks, breaking through old highs, and finding support at discount arrays and making higher lows. Weak currencies are going to have very easy abilities to go through discount arrays, in other words, bullish order blocks and old lows, and they'll be supporting price going lower at resistance at premium arrays and having lower highs. So having this will help us go through a overall approach to filtering out what's the strongest and what's the weakest of all the currencies. And once we arrive at that, we try to narrow it down to 1 or 2 currencies that fit that criteria. Once we have a weak currency and a strong currency defined with relative strength, then we can go into 2 different approaches. We can trade the underlying futures contracts, or we can use the options to trade those futures contracts, or we can use the Forex approach and whittle out a mega trade by using the crosses. Now, obviously, this is an overview, and it will be further refined in detail in August PDF files from the commodity top-down approach. Okay, so let's take a quick look at a few of the futures charts. Okay, here we have the Australian dollar. You can see in recent weeks we've seen the dollar sell off, and the Australian dollar has been in a really nice uptrend. From a relative strength standpoint, Australian dollar has been very strong. It's been finding support at discount arrays. It's been creating higher highs. It's had no problem breaking through old premium arrays and finding support at discount arrays. Expansion moves are the strongest on the upside, and shallow retracements lower. They're all hallmarks to relative strength and institutional order flow, suggesting Australian dollar is obviously a higher moving currency. The next is the euro, and while this has been moving up, we've had a short-term little consolidation that's been plaguing the euro for a couple of days here, but overall the price has been firm to bullish, so this is a relatively strong currency as well. The British pound, this has been in a range, but we did call it higher based on other technical analysis, but I wouldn't call this a relative strength leader on the upside. It's been in a range, it's been rather sloppy, so this would not be one of those pairs that we would look for a mega trade in. The Japanese yen has been in a somewhat of a larger trading range, but it did meet some resistance in the month of June and sold off after filling a fair value gap at the 92 big figure. And the Swiss franc, we had basically a similar situation with the euro. While it's firm to bullish, it's not terribly exciting on the upside. So I don't believe this would have met any criteria for a mega trade. The Canadian dollar has been in a wonderful uptrend on the futures standpoint. It's been finding support at discount arrays, breaking through old highs, smashing through all of the premium arrays that would be in its way, and all the expansion and big moves are on the upside, small shallow retracements on the downside. So this is a leadership futures market on the upside as a buy, so relatively speaking, this and Australian dollar are really good. Okay, New Zealand dollar. This has been in a strong bull market as well. In contrast, you can see that the New Zealand dollar has moved into a trading range versus what we saw the price action in Australian dollar, which was much more dynamic on the upside, higher lows and higher highs. So while New Zealand dollar was a relatively strong currency pair, if we're going to be comparing apples to apples and oranges to oranges, the New Zealand dollar compared to the Australian dollar, Aussie's much stronger in its institutional order flow for upside. So we would have to cross out the New Zealand because they're closely correlated. So our leadership currencies are Australian dollar for strong upside, Canadian dollar for strong upside, and then we had the Japanese yen as a weak currency. So now how can we use this information? We ferreted out two currencies, Australian and Canadian, and we also ferreted out where the weak currency was. That's the Japanese yen. So what we're going to do is we're going to blend the two, and we're going to come up with a mega trade idea using Forex. Now, you can go long on the Canadian dollar in the futures market. You can go long Australian dollar in the futures market, do options, long calls on both of those, or you can use this information. If you don't ever want to trade the futures market, and that's fine, the way you use this information is you want to find a mega trade in the Forex market. This is how it's done. You find a strong currency, which we elected to use the Canadian dollar, which has been in a strong uptrend. We've been talking about this Canadian dollar going lower as a dollar CAD pair for months now. The reverse or inverse relationship to the futures market is the Canadian dollar would be going up. We can clearly see that here in the chart on the left-hand side, and we can contrast that with that of the weak currency or the Japanese yen. We can see the second week or so of June, the Japanese yen went up and closed in a fair value gap at 92 and ultimately fell over and went to a weaker stance for trading. At the same time, the Canadian dollar was finding its new legs higher and rallying up rather strongly. So what we're doing is we're blending these two together to get a pair. So what we would have to do is go through the Forex market and figure out which pair makes these two currencies a cross. You'd have to start obviously looking to see if there's a Japanese against the Canadian or Canadian versus Japanese yen. And as it were, we see that there is a Canadian dollar versus the yen. And this is the result of blending a strong currency with a weak currency and then finding a pair to trade that. You can see the second week of June 2017, the market makes a low and rallies aggressively all the way up to a high of 845 pips as a price swing. Now, I don't talk about crosses a lot. I don't do that because you have to understand this information to do it. If you're trading crosses just for the sake of trading the crosses because you expect big volatility all the time, they can hurt you actually. But if you understand what we're looking at on a more of an intermediate term basis, the crosses will serve you better when we use this approach. Okay, this is how the banks break it down. This is how large institutions work through the currency board to find out how the crosses are going to work. As a market maker, this is how they manipulate the majors to unfold in the crosses. Another example would be the strong currency of the Australian dollar versus the weak currency of the Japanese yen. And that would be in the pair found in the Forex market as the Aussie yen. Again, second week of June makes a low and price rallies aggressively in the tune of 630 pips. Now, if you think about what you've been taught here, it does not give you a day trader's perspective. It doesn't give you a short-term trader's perspective either. It doesn't give you, a scalping mentality. It's giving you real big movers, blast off type moves where the moves are not lethargic, they're not wimpy, they're not slow, they're in a hurry to go somewhere and they are going quickly. And what you're doing is you're pairing a very strong currency against a weak currency, and vice versa. There's going to be times when we are looking for a stronger dollar. That means foreign currencies are going to be looking to go lower. What we'll collectively see is all the foreign currencies will be going lower, but there will be one currency that's trading against that and being strong. And we would be doing the opposite here. We would be pairing up that strong currency against a weaker currency. And that would give us the criteria for another trading opportunity for a mega trade. As you can see here, 800 and 600 pips versus a few hundred pips in the euro and the cable, as we've been following in our mentorship, it pales in comparison. So if you're looking for big moves, this is how it's done. This is how the banks do it. And now you know how to do it as well. Until next lesson, I wish you good luck and good trading.